Hello, everyone. How is everyone doing? Let me know if the sound is okay on a backup microphone today. I had a little tech issue, so let me know if that is going okay or not. How is everyone going? I think I got the sound up all the way up. Yeah, I do. If not, you're going to have to turn up your sound louder. Sorry about that. All right. Good morning, Sterling. Putting in the news. Good morning, Patrick. Wait, we have limited exposure to China's economy? Really? Well, that's groundbreaking news. Where's the Tesla news, Sterling? Morgan Stanley upgrades Tesla to $400 a share. Where's that news? Long dated yields moving up. Sound is good. Thank you, Sterling. All right. All right. Let's see how people still filtering in on the Monday morning. Hey, Patrick, I didn't see you for a few days. Did I miss you? Well, thank you for being here. Let's just get going. It's remember, next week is the next Federal Reserve meeting. We have out this week, not much today, consumer inflation expectations, some auctions, bill auctions. Tomorrow we got Redbook, business optimism index, again, very limited. So Monday and Tuesday, very limited. Wednesday, though, we got CPI. CPI an hour before the cash opened, very important. I mean, very important to the markets. Not as important to the Fed, but if that prints hotter, then it could get interesting going into the Fed meeting, although the market is fully priced in for a pause next. As they've fully priced in for a pause at this point all the way through, March or May next year. But we'll have to see if November jumps, if CPI prints hotter. Thursday, we got PPI. And of course, always jobless claims, retail sales. So that's another somewhat busy day. And Friday, we've got industrial production, we got Empire State Manufacturing, got consumer sentiment, preliminary numbers for September, inflation expectations, preliminary numbers. So again, lots of stuff this week. Not a super busy week, but I give it about a 7 out of 10, 6 to 7 out of 10. Tesla was yesterday's news. Oh, it's gonna gap up today, big time, and it's a mega cap. So we'll see. Yeah, Morgan Stanley upgrading. They cut it, I thought, a couple months ago. Now they're upgrading it based off of. See, look, 6.62%. It's not yet at 6.66%. So we got our mega caps. You should also see a bounce from Qualcomm. Apple signed a new 3-year chip deal with Qualcomm. Did you put that in there? Yeah, you did, Sterling. Thank you. It's for 3 years. Yep. So that's bounce on Qualcomm, but your chips are strong this morning. Microsoft, Apple, Google, Meta, Tesla, Amazon, all leading the charge this morning. If we look at the groups, consumer cyclical, basic materials, technology, comm services, all leading. So it's definitely a risk on day coming up. I just love to say that. Fed watch, as I talked about before, fully baked in the pause for next week. Remember, 9 days, 4 hours from now. I'm going to be watching the next Wednesday, Thursday, if these numbers pop up between November and December. I think if they're going to do anything, they do it in November with the next hike. But you see all the pause all the way through May. Fear and greed based off of Friday's close in neutral, but going to be watching for that to pop up into greed again. If we continue the rally, our earnings this week, not much this morning. Fuel cell energy. After the close today, Oracle, keep an eye on that, although it won't really be market moving. It'll be interesting to see from a pretty large tech company what they do. Then really nothing else unless you're a big Cracker Barrel fan. You could be boondocking in the Cracker Barrel in your RV, tuning into the live stream. And Adobe on Thursday after the close, but really light week. Nothing much going on in terms of earnings. All right. I got the dollar index up to here first. See, nice little pullback. We got daily cycles rolling over, weekly cycles rolling over. So we could be into some consolidation slash pullback for at least a few days, if not longer. Dollar index made a pretty hefty run. The last correction was only like a really 3-day pullback. The correction for that was literally a 1, 2, 3, 4, 5-day sideways. So we're going to have to see this key level, but my key support is still about 103.80. And then the next major support, if we did break below that, is about 103.40 back to the rotation zone. But we've long since kissed this channel goodbye. And we're up against a very strong. Keep an eye. Why am I stressing dollar index? Because even if you don't trade it or care, dollar pulls back can give some buoyancy to the markets. All right, so we could see, especially with market cycles at a bottom. So if the dollar pulls back and then breaks above, you see topping area in January, topping area in March, lower topping area in May, but then coming back to that topping area from January and March. So if this pulls back and then breaks out, you can see another strong run on the dollar, which then I'd be prepared for another potential market rollover. That's why I'm focusing on that first. Now, back here. Remember, we triggered a double. Remember, if you rolled, to focus on the little double on the same double on the Z contract, the DEACE contract. Okay, so that is key. If we get a close below on the DEACE contract below September 7th low, and I mean, it'd be even better if you got below 44.72.75. Then I'll be really watching for a retest. And if we break down below the 43.97 on the DEACE contract, not good. Not good. For the time being, what I'm going to do, since we're in this, I'm going to go to the full contract and back adjust it. And so I'll have to adjust some of these levels. But we're going to we're going to, at least for a while, use the back adjusted contract because of a couple key lows. So that's why I'm switching it at this point. So if you're wondering, I'll have to update all these levels later, but that's why I am doing that, because we have some real key areas to watch for. So I want them highlighted with the DEACE contract. All right, remember we already hit the first target areas. Today we've got the strong bounce on any pullback. Let's take a look. Let's take a look. The key level 45.26, 45.25, and then a major support zone right around 45.11. On a rally, there is not much. This is an advanced clear path. There isn't much resistance starting until right around 45.60, 45.66. So that's the target. Should we keep running and get some momentum bars off the open? That's going to be the areas to the upside above there. The next target would, and this I'm not talking just for today, but 45.96 area. First target that we already hit. That was a stop reduction. Remember, the invalidation of this pattern now is a close below. Hold on, I got to fix this. I got to fix something here. Sorry. I got to fix something. There we go. The close below 44.73.25. 44.73.25 would be the invalidation point. And I'm sorry, that would be also when I'd start watching for the next tip over would be 44.73.25. But if we do get a close below the key low from the September 7th, watch out. Good morning, Jacob. So that's what we're watching here. So again, switch to the back adjusted because of some very key levels and where we're sitting right now. NASDAQ, again, we're going to have to back adjust. We're going to have to update the levels on this, and I'll go through and update the longer term levels later. By the way, Futures Ed podcast should be dropping this this morning, which I recorded last week with Bob, and it focuses on the longer term thoughts, longer term levels. So that is key. That is key to watch for. So if you're interested in longer term stuff, keep an eye out for there. The NASDAQ, I'm watching on the continued rally about 15,695 to 15,720. Key resistance zone, then 15,856, then 15,946 to the upside. The pullback levels. The very key support is about 15,525 and then about 15,475. Also, on all these, remember, we have daily cycles trying to turn up and weekly cycles still heading higher. So we could see some upwards pressure now. You got the good old CPI, PPI coming in this week, but unless those shock like with a much higher print, I have to stay with between the patterns on the doubles and the cycles rolling up. I have to stay in at least choppy to up mode. Choppy to up mode. And if we start getting momentum, and also the VIX, let me jump to the VIX real quick. You see that's key level, 1480, spike above there last Wednesday, spike above there and then reversal last Thursday, spike to the level on Friday, and then a reversal. So unless we really start getting momentum and can sustain it above 1482, I can't shift to a bigger bear case. That's really the key level. If I was going to set an alarm, which I like to set alarms on key levels, at least intraday, if this spiked above 1482, which we'd already see some probably momentum to the downside, but that would be really sit up and take notice. The Dow, which does not have the double pattern. If you want to watch this little short-term move, again, remember, shorter swings, the less probabilities they close above the 62.5 holds. But this is still a pretty decent swing. 35,175. 35,175 is a key level to watch for. So I'll just leave them like that for now. And then you start getting a close above there. Then I'd be watching for the bigger picture. But until that happens, you see from the highs to the lows, the highs from July to the lows from Friday, the key 62, the next major level for the bull case to continue in Dow needs a close above 35,495 again. So those are those key levels. The Russell, this is technically a triple bottom because this double extended. Now on the weekly, you don't see a really great rotation, so I just use some different targets to the upside, but that's a long way off from triggering. For the Russell's been a weak market, but the key levels, the really key areas I'm watching is about 1879, then 1890, and on a closing basis, 1901. Doing some research this weekend, found a 0.62 positive correlation over the past few weeks between crude and oh, that might just be for just remember all correlations can happen. Like you can get some really strange correlations. They don't mean anything. It just means things are trading in lockstep. It doesn't really necessarily mean anything. The DAX still caught in consolidation. Key rally area is 16,000. Key support is about 15,650. As long as it's in here, it's only short-term trading. We got a little mini potential double. I'm still watching for some potential downwards pressure going into the CPI numbers. Let me see here. This is going to have a lot of work to do to update the levels. A lot of work to do. All right. So little mini double, and it's valid on why this is still valid on this one, because you can see the double with the clear rotation on the daily. Even though you on the 4-hour, and I'd require a daily close above 110 because it's extended, but this is still, there was not enough rotation in here, not enough an extended base to invalidate it. If you're wondering, and then the best rule of thumb, if you're trying to look, well, should I trade on the higher time frame? Watch for a clear rotation. If you can still see a clear rotation, it's still potentially tradable on the higher time frame. Would need a 110.5 close above. I'm still focusing on if we do break below 109.19 though. Looking at it on a yield basis, you do have a little mini double top. So that would need a close below 4.207. Other than that, I'm still watching for yields to climb higher, and this little rotation in here does not do anything to invalidate the bigger potential double. All right, but I'm still focusing on some upward pressure in yields. We'll see how that plays out this week. 10 twos. 10 twos. Let's get this so we can see it. 10 twos. See, this is where stuff gets interesting, and I can't. Still technically in consolidation. If we look at the back adjusted, it's back in the lower end, but it's making a higher low right there. Dollar index, we already looked at that. Crude. I'm just going to leave stuff on back adjustments and trying to flip back and forth. It's only going to minorly change the levels. But crude so far, remember, this is a textbook example. Cycles rolling over. What is this? A sideways correction. So, which is a more bullish case. Now, the only thing that gets me watch for the bigger correction is if we break below 86. See, this is how cycles are coming down on the daily, but we're still trading sideways. So even if we pull back again to 86, it doesn't matter. It's still a sideways correction. We start closing below 86, I'll watch for the pullback. And that next key level would be roughly about 83.75 to 84. All right, that's where that sits. Let me just adjust these slightly based off the back adjusted contract. And based off the back adjusted, we're trading against the harmonic cluster right now. So if we pop through there, we're looking at about 92.60. Still watching for the bullish case even. And look where the rising rotation zone is on the weekly. Just below that 83.75 area. So even if you got the bigger pullback, it could catch on the prior major resistance becoming support and rising weekly rotation zone. So no bear case yet for crude. What else? Gold. Gold key levels. I'm focusing on this 1955 area. 1955 is pretty key. For the breakdown is 1940. Other than that, it's no man's land, but I'm more so focusing on with cycles turning up to the break above this 1955 area. Where else do we sit? Where else do we sit? Oh, 10-year JGBs, big pop here. Holding the rotation zone the whole time. Even JGBs held the rotation zone and popping up 70 basis points. I don't think we're close enough to the intervention level on these yet, but if this keeps climbing, especially, gets above 80, start watching. Yen pulling back, but catching on the daily rotation zone. So the only thing that shifts really in the short term for a bigger pullback is a close below 146. 146 euro. Watching for the pop here and then the rollover play. I would not, personally, I am not super bullish on the euro. We'll watch into the daily rotation zone, especially if it gets above about 107.50 for a continued rally. Remember, overhead, we could still kiss this channel away. We could still hit the 200 and the declining rotation zone. That would just be a little corrective move before the next rollover play in the euro. There is not a strong bottoming formation here yet. All right, this is just a mess so far. So any pop, we'll be watching still. The pound coming down to that 200 area. I'm going to be watching for a pop here and then a rollover play also in the pound. Unless something distinctly changes on this pop. Bitcoin, still caught in consolidation. Spiders, still. Let's see, 148.11. The key areas would be Friday's high 448.11. Friday's high is 447.11, so that would be the first level of support if we did roll over. The next key area of support is about 445.50. To the upside. To the upside, minor resistance 448.50, and then there's still a gap left behind between last Tuesday and Wednesday. There's still a gap left behind to 449.24. Then we got 450.33. Then we have 452.89. And then finally, to complete the double pattern would be 455.44. And there is still a double left behind between August 1st and 2nd. With cycles getting to the bottom on the spiders, and you see also the weeklies turning up, holding the weekly rotation zone. The daily's not looking as good, but we still have the final target left on that double. Now, what invalidates that at this point is a close below 440.76 or an intraday trade below 438.18. The Qs, same 375.66, so a gap up. First level of support, 374.85. Friday's highs, and then Friday's closes at 372.58. To the upside, we pretty much filled the gap from last Wednesday to Thursday, but and we're trading above that now, which corresponds to Friday's high. So above that, let me jump to the shorter term chart. We're looking at roughly about 376.80 to 377.50. You still do have a slight gap behind, then to 378.06, and then 379.82 are the key levels. I just want to see where the little reverse harmonics on this pullback take us. And that reinforces the second target area for the double. All right. All right, what else? Tesla on the Morgan Stanley upgrade. Remember, you got a lot of Twitter debt coming due that Morgan Stanley is a huge holder of, a huge underwriter of Twitter debt, and that's coming due. Some of the key payments in October. Maybe there's something to do with an upgrade on Tesla. So we'll see. We'll see, but you start getting the close above 266.69 from a purely technical position. This could easily run higher. We never broke below that 245 area with any follow through, and then definitely not 240. So I'm watching where it closes, 266.69, but the minor breakout level is 258, and it's well above that. So cannot be really looking for any rollover plays unless we form a topping pattern that's stronger than what would be the breakout play. NVIDIA on the little 4 hour. 4 hour, we have a little mini double. Let me just put it on the 1 hour, actually. It's a little sloppy on the 1 hour, but we're still going to just focus on this with the 4 hour double. Remember, you also have a gap left behind. So that's a little mini pattern, but you need the close above 466.06. And that's only for a mini pattern. It could take it back to 479.20. We had some other, let's just take a quick look. Other mega caps. Apple completed the 87.5 after sort of the gap down closing. It already completed the 87.5. So with this, on any rally, remember we have Apple Day tomorrow, new iPhone announcements. But on any play, on any bullish play, I'd be watching for the gap fill to 182.91. Okay, I'm still watching for the Apple to start rolling over bigger unless we get that gap fill and then the close above 183.78. You're shocked that I would even insinuate that Morgan Stanley would ever be disingenuous and for self-serving purposes? Well, I guess I will shock you, Sterling. Oh boy, it's such garbage. Come on, I mean, there's, if you're I'm not going to say anything else. It's just a complete, and the people who actually believe this crap. The people who actually believe this crap, you know, it would be ironic also if they pump this up and then Elon sells into it, or they do, and also they piggyback on it a debt offering for Tesla. Wouldn't that be ironic? Well, let's see. We're going to put on a price target at 400, and then we're either going to do either Elon's going to sell in it for servicing debt for Twitter, or we're going to do a debt offering on Tesla. Wouldn't a capital raise? Wouldn't that be funny? But that's Wall Street for you. All right, 1 minute to go before the open. Thank you for tuning in. Looks like I'm going to be watching it, see if we get some momentum off the open and a strong tick. That's what I'll be watching for. We're already holding up, at least in the going into the open. I'm going to be focusing on 45.30 and the first target being 45.47 the upside. So any pullback 45.30, 45.47 in the upside, and I will talk to everyone later. Hey, Patrick went to our annual hog roast in Walton, Kentucky at Lake Cottage in northern Indiana today. Well, thank you for tuning in. I hope your hog roast was good. You're going to be driving on your way back to Minnesota. You're going to be passing right by me, I bet. So I'll talk to everyone later. Bye for now.